The war that we've had in Iran has caused a lot of damage. There's damage to infrastructure that will take 3 to 5 years to repair. The world is going to have less oil, and that's for a while. And GDP tracks energy consumption. We are in extreme bubbles, which I will show you in a minute. The world is in for energy shortages, and these higher prices are going to be permanent from this, and that is the pin that pops the bubbles. I really do think that the future, sometime soon, holds one of the greatest crashes in history.
Well, hello and welcome to the Real Estate Guys. We're coming live from Puerto Rico, which is, as you know, its own country, but also a territory of the United States. And we're here for a conference, which is really a group of folks looking for how do we put our money to work with everything happening in the news. One of the speakers on the conference is my good friend Mike Maloney, and so we're going to spend some time today with Mike learning about where we are in world economics, all the things in geopolitics, and what the news headlines mean to investors, and more importantly, what you can do about that. And our theme today is resilience. Resilience means that no matter what happens, you'll be okay. You might get knocked down, but you'll get up again, and that takes some preparation. Les Brown says it's better to be prepared and never have an opportunity than have an opportunity and not be prepared. At the Boy Scouts, that is our motto, be prepared. And so as you are with us today, I want you to be thinking about not just the doom and the gloom and the bad news that may be coming our way, but what can we actually do about that? The real estate investors and people who take advantage of these ideas and take action will win. When we come back, you'll meet my friend and best-selling author Mike Maloney today on the Real Estate Guys. In order to talk about resilience, we've come to the jungle and rainforest of Puerto Rico. I'm Robert Helms, and with me is my good friend Mike Maloney. How are you?
I'm doing fine, yeah.
We're here at the top of your mountain. We'll talk about what that means before we're done. Yes, but we just got finished at a great conference in San Juan, and you did a magnificent presentation on this topic, but you had a short amount of time and had to rush through it. So we want to let it breathe a little more today. And to set this up, Mike, you've been for years following the economy, the financial system, the metals, all of the components, and things are converging in a really interesting way. So this is a very timely talk. And I have to warn the audience that at start, we're going to scare you a little bit, but we won't leave you hanging. We're going to have some real keys to resilience before we're done. So what do you see going on in the world?
Well, right now, the war that we've had in Iran has caused a lot of damage. There's damage to infrastructure that will take 3 to 5 years to repair. The world is going to have less oil, and that's for a while. And GDP tracks energy consumption. We are in extreme bubbles, which I will show you in a minute, and these are the pins that are going to pop that bubble. I really do think that the future, sometime soon, holds one of the greatest crashes in history. We've never been in bubbles of this scale before. And then this sudden spike in energy prices, and a third of the world's fertilizer comes through the Strait of Hormuz. And so that has been completely interrupted for more than a month. And so if they do come to some sort of peace thing, there's still going to be a global disruption. The damage, like Qatar, has they're the largest exporter of natural gas in the world. The largest natural gas field is in Iran. And Iran damaged the Qatar infrastructure for producing natural gas. It's going to take 3 to 5 years to fix. And so the world is in for energy shortages, and these higher prices are going to be permanent from this, and that is the pin that pops the bubbles.
Well, let's talk about the bubbles, because some of these bubbles have been forming long before the Iran issue, and now the pin is something to watch. And you've been paying attention to this for a while, so it's not just one thing, it's several things.
It's a convergence, okay, I'm going to put on my hat because it's sunny. Actually, a cloud just came by, so I can postpone.
All right, I'll get my real estate sunglasses on.
But I sunburn easily, and if I have much more sun, I'm going to peel tomorrow. So,
which won't be appealing.
You don't see my face quite as well, but okay. So my presentation was titled "Financial Resilience and Survival in a Dangerous, Uncertain World," and the first thing I went through was a chart of the traffic through the Straits of Hormuz. So this is the number of ships that are able to make it, and it just absolutely fell off a cliff. And then I showed the number of barrels of oil that typically, so about a third of the world's oil comes through there, and it's been shut off for a month and a half, and then there's no way to make up for that lost capacity. It's not coming back. And then on top of that, we have damage from this war to a lot of the infrastructure that produces. So it's going to take a little while. Then I've got fertilizer exports. And this all comes through a third of the world's fertilizer comes through the Straits of Hormuz. And it just pretty much stopped when this war broke out. So ever since the beginning of the war, was that late March, I believe? Yeah, I think it was March 28th or something like that. There's been this supply, a third of the world's fertilizer, just completely shut off, and we're going into planting season. There are people predicting famine in Africa and so on, because in Africa, they can't afford these higher prices. The supply and demand is always set into equilibrium by price. As long as the free markets work, price balances those things. And if a government mandates lower prices, then you just have shortages.
Hi, and a warm welcome to everyone. Yes, this is my brand new YouTube channel. And no, I'm not AI. I've been getting a ton of questions lately, and I need to clear some things up. On the very last day of last year, December 31st, 2025, I left goldsilver.com. Now, goldsilver.com is still an excellent place to buy precious metals, but I'm no longer with the team. Instead, I'm focusing on my health, and I'm honoring a 1-year non-compete clause that was in my contract. So I can't be active in the precious metals industry until January 1st, 2027, when I become a free agent and I can do whatever I want. I can, however, comment on the markets and I can speak my mind, and that's exactly the reason that this channel exists. So before we go any further, please, please, please hit that subscribe button. I'm not going to be posting as often, and it's going to be quite random. But, I think some of the things that I put together can be important to you. I know they're important to me, and I hope that I give you new perspective on things. Right now, I'm working on the most important thing in my life, the biggest project I've ever done. I've been working on it for many years, and it's just about done at this point. And I need to dedicate as much of my time toward that as I can, and it will dwarf anything previous that I've done. My books, my video series, Hidden Secrets of Money, it's going to be much larger than that, and I can't wait to share it with you when it's ready. Anyway, drop a comment below on what topics you want to hear about most, and I'll try to get to those. Also, any investment decisions that I make, I'm going to reveal them here and on x.com. And so for x.com, it's at Mike_Maloney. There's probably going to be some pretty rough economic waters ahead, but I think it can be clear sailing and a very bright future for anybody who is prepared. I want to thank you for your support.
It doesn't balance. But poorer countries are going to be priced out of the market for fertilizer, and so we are expecting things like some famine and so on, crop failures to happen and so on. So this is not good news. And then the next frame is just some headlines out there. The war in Iran sparks global fertilizer shortage and threatens food prices. And then the next one is from Christine Lagarde, the head of the European Central Bank, warns of possible food rationing due to food rationing. She's speaking to her European audience. They're already saying they may have to ration food in Europe due to fertilizer disruptions. And then a quote from her: a third of fertilizers are shipped through the Strait of Hormuz. That is at risk. And then the next chart that I showed was fertilizer prices. And this chart was already a few weeks old. And it's almost doubled. And that was a few weeks ago. With a lot of fertilizers are made from the natural gas and the things where we've had infrastructure that is damaged. We're talking about 3 to 5 years to repair it, and normally you have a growth of output almost every year. And so suddenly we've got this drop in output. So do you have any comments on all of that?
Well, I think the big news here is that most of the agriculture in the world relies on fertilizer. Not all, and we're going to cover that near the end of the show, but it is a huge part of the entire ecosystem of the delivery of food. Yeah. And it's the early indicator. Long before there are crops, there are orders for fertilizer, and it takes a long time to get there. And we've taken for granted just a simple logistics chain, and we know if we go into the big hardware store, we can get a couple of bags of it. We're going to see this disruption play out across the board. And I think the point to think about is wherever you're watching from, if you're in the United States, it's going to be a little different and a little more of a lag than it is for Europe and for the poorer nations for sure.
Right, but it is already, I was reading a lot of articles about this, and the headlines, how especially the farms in the South, they have not done their pre-orders, and so the whole southeastern United States, where they grow peanuts and things like that, that is at risk. And I think it said that 73% of all of the farmers there say that they can't afford the fertilizer for this season's crop, not at these prices.
Yeah.
So the price of all the food in the United States has to soar to match the costs of their input, or they're bankrupt and they lose their farm, and then there's no peanuts or whatever, cotton. All of these different crops that are grown down there, but it was every region of the United States, a large percentage. That was the largest percentage, but every region had a percentage of farmers saying they're not going to be able to stay in business at these prices, that they just can't make it. And so this is very, very dangerous. And with the stock markets and real estate in these historic bubbles, all-time highs on certain measures, way above the 1929 peak that led to the crash that created the Great Depression, way above the NASDAQ bubble in 2000. We're just in uncharted territory. And then there's all these multiple pins: price of fuel, fertilizer shortages, and the price. And so this chart here shows the price almost doubling, and it's a few weeks old. So if I had an updated chart, this would probably be fertilizer doubling in that period of time. And that is actually a benefit I've been preparing for this for the past 5 years, as you know, and we're going to get to that later. The next one is a chart from Tavi Costa, and it says energy leads, food follows. And this is gasoline prices, and this is also a couple of weeks old. And it shows this huge spike in gasoline prices, and this is and there's a high correlation to food prices, and this goes all the way back to 2007. And so you see them sort of tracking each other like this. And gasoline went up, food prices have not yet, but they will. That is the important thing.
Well, and Mike, part of it is that the cost of energy, oil, is baked into everything. All that food has to get to the grocery store, and that takes energy.
Not just get to the grocery store, but the chemical inputs are the herbicides, pesticides, and fertilizers are all derived from oil. And then you've got to plant using diesel equipment, and you've got to harvest using diesel equipment, and then you're going to process all of the food with either energy from oil or electricity, and it depends on what power plant you're drawing off of. It's most likely going to be some sort of petroleum derivative that is running the power plant. And so it affects the whole chain, and there's a multiplier effect. You add this price increase, and then this price increase, and this price increase, and they all sit on top of each other.
Yep.
So the next chart is what I've included here, and I want you to see this. So this is Brent crude is the light blue,
yep.
And a basket of OPEC nations crude is the black line or dark blue. It's in the sun here, so I can't actually see it too well. And they diverge right here, yep. But then they came right back together, and you're talking about going from about 65 or 70 bucks up to the Brent crude, the OPEC basket looks like it hit about 140.
Wow.
And now both of them are at about it's 108 is what it says for the Brent crude. And then the next one I show, years ago, I spoke at a conference. It's the Sochi Banking Conference in Sochi, Russia. So this is the Eastern Bloc nations and the Russian banks. It's their Davos. It's a big, big deal. And I was showing them how their GDP tracks the price of oil. They're one of the largest oil exporters, and a large portion of their economy runs off of the income from exporting oil. And it's the same thing. This is Russian oil, and it went down here from under $60 a barrel to about 108, 110, something like that. So this is global. I found a website where I could look at probably 150 different crude oil prices from all over the world and everywhere. It doesn't matter whether it's Kansas or West Texas crude. The price of oil has spiked tremendously because everybody needs to source their oil from elsewhere now. And so this sort of backfired as far as their plans. We still have the war in Ukraine going on and right. Russia, and now Russia is getting financed by this very expensive oil. If they're selling to China, it doesn't matter. It went way up, and so. Because it's global, because of the infrastructure damage and the length of time that it's going to take to repair, I just don't see how there isn't going to be some sort of huge economic convulsion and market crash sometime soon in our future. Now here is the price of gasoline wholesale, and it went from about $1.80 to 350, above 350.
Wow.
I mean, you're talking about some just incredible percentage increases in a very short period of time. And when something is that volatile, nobody has the time to adjust. And so that perturbation should be causing some huge market crash.
Well, people are seeing it at the pump, but for real estate investors especially, if gas is $1 more a gallon, you're going to grumble about it, but you're going to fill your tank. But think about your tenants. Your tenants are going to be hitting the maximum amount they're going to be able to afford, and they may have to rethink where they live. They like the 20-minute commute from your apartment, but maybe they need to move closer to work. So this has real ramifications for real estate investors.
Yes, and if you're building, if you've already got your apartments and you're fully invested and you're not planning on building anything new, then you're benefiting as far as the property value, because all of the new structures are going to cost like 30% more to build suddenly.
Right.
This big jump in the cost of construction,
yep.
Because it's going to affect everything: the lumber, the cement, the copper, everything that goes into building that apartment is going to jump in price. So pre-existing real estate is a good bet. except your point, can the tenants afford it?
Right.
So now we're getting to the bubbles. So this chart is the Buffett Indicator, and I usually make or have somebody make all of my charts.
Right.
And the problem with this only goes back to 1980.
Okay.
And
so, Mike, take us through what the Buffett Indicator is. No investor left behind.
Thank you. Because if you don't define something, you lose the audience. And once you've spoken over their heads once, you sort of lose them for the rest of the presentation. That's something Robert Kiyosaki taught me.
Yes.
I traveled the world with Robert Kiyosaki from 2005 to 2010, speaking to audiences everywhere, and as large as 30,000 people in the audience. And in 2003, 4, and 5, I had taken courses with Robert Kiyosaki on how to present on stage. So I'm trained by him, and he is one of the very best at controlling a room and conveying information. And he said, you always have to define everything.
So the Buffett Indicator.
The Buffett Indicator is simply a measurement of the value of all of the publicly listed stocks. How much is the stock market worth compared to the value of the U.S. economy, the GDP?
Yeah.
And this chart that I'm showing has a big problem in it. You can see that it rises over time, and the guy that created the chart has put a regression line in it that is showing that trend. It's averaging all of the data on the chart. And people will think that this rising over time is normal, and that if it crashes, it'll only crash down to this line or a little bit below that. But no! I've got analogous data that shows it goes back another century. And for a century, the value of the stock market was 50 to 60% was the average of the economy. It has no business. The publicly listed companies are not the economy in and of themselves. The economy is mostly made up of smaller corporations, owner-operator places, restaurants, dry cleaners, all of those things, and they're not publicly listed. There's only about 3,500 publicly listed companies, and just those 35 companies are currently 232.6% larger than the economy, the value of them.
Wow.
This is totally insane. I call it the bubble century, and now I'm going to show you that, because these charts were not in my presentation that we just did day before yesterday. So this is the hours that you have to work, that the average person would have to work to buy one share of the S&P 500. And it goes all the way back to the Civil War. So they've reconstructed. The S&P only goes back to 1950, but people like Dr. Robert Shiller have reconstructed the 500 largest companies in America and taken their valuations, the stock price, and so on, and created PE ratios and things like this, hours to work to buy them. And so back to 1860, you can see that the average was about 23 hours of work, and then suddenly, in this century, it jumps up to an average of about 75. And this is from my book. This was published in 2000. This chart was created in 2002.
Yeah.
I just wanted to show you the bubble century, but this has kept on rising. I have no idea what it costs how many hours of work it'll take somebody, but it was already up at about 125. We're probably up closer to 150 at this point.
Yeah.
This is 2002. And so 150, and it should be 23.
Yeah.
I mean, the crash that we are in for could be horrific. This is also from my book. It's called The Great Gold and Silver Rush of the 21st Century. And it's a real education on monetary history, where we've been, economics, the current state of the global economy, and then gold and silver is like the last thing. So even if you're not interested in gold and silver, it's a great source of understanding what is going on around you. Once you learn all of these things about economics, and even there's an online chapter that is the funnest, easiest to read. It's very short. It's going to take you 20 minutes to read this whole thing. It's a primer on how to read charts, because any chart that somebody is creating, the creator of that chart can sort of spin the data to lie to you. If you see it, like I see on Zero Hedge all the time, such and such a stock cratered today on news that, and the stock is going along and it just plunges. But you look at the scale, and the scale is from 100 to 99.
Right.
You zoom out and make this 100 to 0. You can't see that.
Barely
crash.
a blip.
It's not. You can't. It's not even a blip on the full chart. And people do this all the time. If you see two scales on a chart, if you see two different timelines, there's a whole bunch of ways. Whether it's linear or log, you need to understand the differences between linear and logarithmic charts.
That's a great resource. Now, you have that on your website?
Yes, I will put it on my website, but it's at ggsr21.com right now, which stands for Great Gold and Silver Rush of the 21st Century, ggsr21.com. This is PE ratios. So a PE ratio is the price of a stock of a company divided by the earnings per share. How much of that, how much did the company make last year or that month, and how many shares are there? And this is Dr. Robert Shiller's data going all the way back to 1880. And as you can see, there was an average of about 14 or 15 until we got to the bubble century. And people are sort of used to these PE ratios. Investors that have only been investing since 1998 do not know that everything has been insane since 1998.
Right.
This is crazy. They're paying multiples of 30, 40, 50. Some tech companies 100 or even infinite. If they're not making a profit, they're paying an infinite multiple. And so it just shows that Buffett indicator that had the rising trend line, that is dangerous to show people, because you're convincing people that, well, maybe it's not that much overvalued. No. This is the greatest bubble in all of history. And then we get to another way of looking at the Buffett indicator on this bar graph. And what you see here is that we are just way, way, way above the 1929 peak, the 1987 crash, the year 2000 and the NASDAQ bubble, the real estate bubble of 2007 that led to the 2008 crash, and then today. But more importantly, the PE ratios and the Case-Shiller cyclically adjusted price is the PE ratio that's a trailing indicator, and so it's more than a year late. These red bars. Currently, the S&P PE ratio is so there is no measure that doesn't show the stock market in the greatest bubble in history. This is, I'm sorry for the sort of blurry chart, but this is somebody else's chart. I've been showing this chart since 2004. Okay. I was warning about the real estate bubble that we were going into. I'm always early. People consider me crazy for about 3 years, and then they go, oh, he was right. And so in 2004, I was saying, this is getting dangerous. You need to rotate into other stuff. And at that point, I think gold was around $400, and now it's over 4,000. Silver was in the fours, and so and now it's in the 70s or 80s, and so it was really time to get into those things, because they've been the best performing asset of this century, with the exception of cryptos. But cryptos were starting from zero. And when you go from 0 to 1, that's an infinite return.
Right. Right.
So this is Dr. Robert. I tried to generate a brand new chart. Dr. Robert Shiller's website is broken, and his real estate and his PE ratio to the stock market and the real estate charts or links both lead to the stock market right now. So I couldn't update this. But there is the average, and it shows you the scale of the crash that we could be in, even for real estate.
Yeah.
And then you know what happens when there's an economic crisis. Rates drop to 0. And mortgages get real cheap, except no bank will loan anything.
Right.
They're scared to death. Their balance sheets are all upside down. And so the rates might be cheap, but you can't get a loan.
You know, this is such a good point. George Gammon was on the show a few weeks ago. He nailed this, the fact that interest rates are completely separate from credit availability.
Yes.
Those are two different things, and that example is exactly what happens.
Yeah.
Even though the rates are low, good luck getting a loan.
Right. You know, even Kenny McElroy and Robert Kiyosaki, they were both saying how difficult it was to get loans during, after the crash in 2008, the global financial crisis. For a few years there, when mortgages were so cheap, it was hard to find currency. It's not money. It is currency, and there is a big difference. You got to buy my book. Currency, the very math behind its creation guarantees that it's going to lose value.
Which every single fiat currency in the world has.
Right. This is office commercial mortgage-backed securities, the delinquency rate on them, greater than after the 2008 crash. You see where it was way down in 2008. It was the bottom of this at the peak of the bubble, and then it rises into 2009 and 2010 when everybody is going bankrupt and they can't afford to make their mortgage payments on these commercial mortgage-backed securities. This is private credit defaults at an all-time high, way above the 2008 financial crisis. The people doing Google searches for sell my house. This is the people doing Google searches for can't sell my house. So those are at all-time highs. This is the surge in energy prices and the high possibility of a recession. Well, there's only 2 bars on here where the recession bars are the gray areas, where it didn't spike above, where the change in energy prices wasn't this sudden 50% or greater. And every time that it crossed this line, though, it caused a recession. A recession in the midst of these bubbles is not going to be just a recession. It's a potential modern-day depression, except that we know what the Fed's response is. Print.
Yep.
Right? It's actually not print, it's type.
Yes.
And then this is the banks are in horrible shape.
Wow.
This is the bonds that are on their balance sheet. And you can see back in 2008, they weren't upside down. The banks are all upside down right now. This time it's global. This is residential real estate in China. And that is the biggest investment market in China by far. And it's already, in the past 2 years, it's down 25%, and it's going to crash further if we have a global crisis, which we are in for. This is the levels of debt that we are starting this crisis at. The greatest levels of debt to GDP in the history of the United States, greater than the debt that was left over after World War II. To me, all of this seems totally insane. Our politicians are all like blind to this, and they keep on getting us deeper and deeper into debt. I just inserted this so you can see the value of the dollar since the Federal Reserve was established.
I think I can spot a trend there, Mike.
Yeah. This is because of the math of the way fiat currency is created. It is not money. It cannot store value. Aristotle was the first person to define the key attributes that something has to have to be called money. It's got to be a medium of exchange so you can do business. It's got to be a unit of account so that you can put a price on something. And it's got to be, most of all, a store of value. national fiat currencies do not qualify. Most people have never used money to pay for something in their entire life. If you're old enough to have used silver dollars and silver quarters and stuff, then you did use money. But throughout the centuries, the only thing that has been proven to be money is gold and silver.
This is exactly why our friend Robert Kiyosaki says cash is trash, because it's not that you don't want cash to do things with, it's
Right.
that every minute you hold it, it's going down in value, which is why real assets like gold, like silver, like real estate can make so much sense.
Yes, we're sitting on top of my mountain here. This is 900 acres, and I am invested in a resilience play right now.
Well, let's talk about that, Mike, because I think that's
Okay.
the kind of the key. People
We're
want to
getting
know
there.
what to do. Yeah.
Yeah, we're getting there. And you know what? We're running out of battery power, and we're going to finish this up down on the the main area of the ranch where you don't have the view. This is the very first time I've done anything from the top of my mountain. So on top of all of these things, you've got the Bulletin of Atomic Scientists have reset the doomsday clock. How close are we to potentially World War III and the annihilation of all of humanity? And it's now 85 seconds to midnight. But that was set at the beginning of January before this war in Iran. They would probably be setting this to less than a minute at this point. We are in an extremely dangerous period in time. And so what have I done? Let's go down to the we call it the community kitchen. That sounds a little bit socialist, but it's not. We're going to go down to the main area of the farm where we assemble, and we're going to finish this video there.
Don't get too scared, because there is hope, and you'll have to take some action to make sure you do the right thing. Our guest is Mike Maloney, best-selling author in the world on precious metals. We'll talk a little bit about gold and silver and about real estate when we come back.
Thanks.
You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.